Hey everybody, it's Jack and welcome back. It's that time of the week again where I update you all on the progress of my WealthSimple Small Account Challenge. We just finished week 5 of the challenge and it's been an overall pretty crazy week with the stock market. So there's a lot to update you on. I'm going to be going over what positions I added, what stocks I added last week, as well as if there's any that I sold. I'm also going to be going into my watch list for next week and the stocks that I'm looking to add to my portfolio. So there's gonna be a lot of information in this video. So let's get right to it. I hope you guys enjoy. And if you are new to the channel, just quickly what I'm doing is I am doing a small account challenge using WealthSimple, where I'm trying to build a $1,000 account up to $100,000 through smart investing and saving money like crazy. So let's get into how my account's doing and its overall status. The overall theme for last week seemed to be that growth stocks continued to take a little bit of a hit for the majority of them. And then the safer dividend stocks actually did fairly well. They did really well overall last week. So that's kind of what we saw. The growth stocks took a little bit of a hit while the dividend stocks, continued to do well. So my account is currently at $2,190.76. So I've been able to put a little bit of money into the account over this past week, which is the majority of this gain from last week. And you'll see that WealthSimple actually added a new feature where you can instant deposit up to $250. So that's been really nice when we've been seeing these dips, being able to put a little bit of money in right away and buy on the dips. And we can see that Friday was a crazy day. It shot down and then it actually shot back up the second half of the day. And I was able to be up 4.5% on Friday. And this actually led me to be up on the week overall. I was actually down almost the entire week, just slowly going down until that Friday afternoon rally. So I actually finished the week up $60 at 2.84%. This is pretty sweet for a week that was pretty shaky overall, and we saw quite a bit of swings. So now let's get into actually the positions I hold within my account. So I actually only added one new stock this week, and I didn't actually sell a single stock. I've only been buying over the past week as the market declined overall. So I actually went ahead and added the stock Fortis to my account, ticker symbol FTS. This is a utilities company that I did feature in one of my previous videos. It'll pop up on screen that for a dividend stock to buy and hold forever. Fortis is a stock that has increased its dividend year over year for the past 47 years straight. This is the second longest streak in the entire Canadian stock market. So this is a really consistent stock that increases its dividend year over year. And if we look at the actual analyst ratings, they are predicting the stock to be able to get into the $60 range over the next year. And I was able to get into the stock for 2 shares at $50. I think this stock is a no-brainer around the $50 range because you're going to be pocketing a nice 4% dividend along with that potential to see that $10 stock appreciation, which is a 20% gain overall. So this is a really nice stock and consistent stock that you're going to get a reliable dividend from and might be able to see that nice capital appreciation over time. So I'll just quickly run through the current holdings that I have in case you're new to the channel. So I have Algonquin Power, Brookfield Renewables, Enbridge, Fortis, and then my growth stocks are Good Natured Products, Green Lane Renewables, H2O Innovations, and Standard Lithium. And then I've got 2 other dividends in Smart Center's Real Estate Investment Trust, which pays out monthly, which is super nice. And then I also have TELUS, so a telecom company that I think has a great dividend, nice share appreciation over time, and consistent dividend growth. And then I own 2 ETFs, VDY, which is a Canadian dividend ETF, which pays around that 4% dividend, and it pays out monthly, which I really like. And then I also have VFV, which is an ETF that just tracks the overall US stock market, so that if it goes up overall, it's consistently going up around 5, 7, 10% a year. So that's just kind of tracking the overall market and gets also a 1% dividend, which is nice to have as well. So I'm going to hop right over to my Excel spreadsheet where I track my stocks and the dividends that I earn. And I'll be able to jump in and show you guys all in one place the overall shares of stocks that I've added over the past week and to which stocks I added to and which stocks I plan to add to next week. So here's my Excel spreadsheet that I use to track my overall dividend income and my portfolio diversity and breakdown all in one place. It's pretty simple and easy to use. And you guys have been asking for me to share this spreadsheet or share a template with you all. and I can successfully say that you can now download it in the description of this video. So there is going to be a Google Drive link that you can click on and download the Excel file to your own computer and add your own portfolio to it, and then track your dividend income and your portfolio using the spreadsheet. So I really hope you guys enjoy it, and comment down below if you run into any issues with the overall spreadsheet or need any help figuring it out. So with that being said, let's now go over the shares and positions that I've added to over the week. So you can see that here I have my Fortis FTS that I've added 2 shares at $49.90 as my price, and that pays out a nice 4% dividend, which is going to give me $4 in annual income from those 2 stocks. And then I also added early in the week 2 stocks to my TELUS position. So I now have a total of 8 stocks, and I'm getting a nice 4.7% dividend from that. So that's super nice. And then I've also gone ahead and added 2 shares of Brookfield Renewables. And remember, guys, last week I showed you guys, I talked about what I was going to be adding to over the week, and that's exactly what I do every week. So whatever I'm going to say in the end of this video about what I'm planning to do next week is most likely what I'm going to actually do. So just remember that, and I really try to stick to my plan and always have a plan in place. It makes investing a lot easier. So we're up to 3 shares of Brookfield Renewable. Renewable took a really big hit this week overall, the entire renewable sector. So if this hit continues next week, I might plan to add another share or 2 to my Brookfield Renewable position. I really think this is a company long term that is going to see a lot of growth. The renewable energy sector is going to be one that needs to expand over time to meet demands. And this one's currently paying a 3.1% dividend yield. So not as high as the others, but again, this is also a growth stock play. And then for my growth stocks, I've been chipping away at adding to each of my growth stock positions, as the overall growth stocks have taken quite a significant hit over the past few weeks. So I added around 10 shares, I believe, to H2O. And then I've also added, I believe, around 12 shares to Standard Lithium. It's come back a little bit, but it took a really nice hit. I bought in some shares, and then I've started to already see that it's bouncing back, which is nice. And I've also added 20 to 30 shares to both my Good Natured Products and my Greenlane Renewables. And remember, guys, I said that these, you want to get a starter position in these and then add to them if they continue to go down. That's exactly what happened. So I continue to add as these go down, and I really think that these 2 stocks are going to explode over the next few months to a year. And then there's definitely some news coming out about Greenlane Renewables next week, so I'll be talking about that. And then finally, I added 1 more share to my Vanguard Dividend ETF, which has also been seeing some nice growth over the past few weeks, and it gives a 4.1% dividend. So I added 1 share of that. So to recap, I've been beefing up my dividend stock positions to make them take up more of the overall account, but also chipping away slowly at adding to my growth stocks as they decline, been bringing my average cost down for all of them, so that when they go back up, we're going to be seeing higher gains because of that. So if we now go and look at the overall dividend tracking, so we can see that from this week to last week, there's quite a big difference. We've accumulated around $9 extra in annual income from adding a few more dividend stocks to the portfolio. And then we've seen that our monthly average income has gone from $3 to $3.83. So that's an extra 80 cents every single month, hopefully for the rest of my life, that I'll be getting because I've added some more dividend stocks. And remember, that's the goal. A few dividend stocks a week is going to continue to increase your annual income off of your stocks. And then if you continue to invest smartly over time, you're going to just keep increasing that. And imagine if you're doing that for 20 years straight, imagine how high this can come. We're only a month in and we're getting around $4 per month already off of our stocks. And this is just going to increase exponentially as we continue to grow the account. And as those dividend stocks raise their dividend payouts every single year, hopefully we can start to see that snowball, and really start to see meaningful income come from our dividend stock. So looking now at our overall portfolio breakdown, you can see that I've added in Good Natured Products, Greenlane Renewables, and Fortis to the pie chart. So we're seeing a bit more diversity overall. And we can see that, again, our goal has been to bring down the overall percentage of H2O Innovations and Standard Lithium in our account, because a few weeks ago, they were taking up over 60% of our total account. So we want to de-risk it by diversifying into more dividend stock and really just beefing up our dividend stock positions and adding to our ETF positions as well. So we can now see that H2O and Standard Lithium only take up around 40% of the portfolio, which again is not great. It is a little bit risky to have this much into 2 stocks, but these are great long-term plays that I'm planning to hold for years to come. So again, I'm fine with that right now, and we're just bringing them down slowly as we add to other positions more aggressively. So you can see here's the breakdown. We've got around 11% in Algonquin Power, as well as 10% in TELUS, and around 5% to 7% in most of my other stocks, a little bit less in the growth stocks and in ETFs. My primary focus will now be to adding to the dividend stocks, as well as my ETFs to bolster those positions. And I said it last week, but I'm going to say it again. The end goal is to be around 60% dividend, and then around probably 10% in ETFs, 10 to 20, and then 20 to 30 in the growth stocks, which are the ones we have high conviction in that they're going to really take off and be long-term plays and hopefully see some really nice returns from those growth stocks. So now heading over to this week's watch list. First, I'll cover the growth stocks that I'm watching for this week. They are Good Natured Products, Greenlane Renewables, and H2O Innovations. So I plan to hopefully add to all 3 of these positions, majority being in Good Natured Products and Greenlane Renewables, as I want to bring those position sizes up. So my goal is to hopefully add Good Natured Products around the $1 mark or the 90-cent mark. The 90-cent mark is where it has a really strong support level. So if it gets down to there, I think it will only shoot up from there. We saw a dip under $1 on Friday really briefly. If the overall growth stocks continue the way they're going and are starting to sell off, there's a really nice support for Good Natured Products at the 90-cent range. And then Greenlane Renewables has seen quite a sell-off over the past week, which I think is really creating some really good buying opportunities. And they actually released their earnings report on the 11th of March. So I think that's going to be a really good earnings release. So I'm going to hopefully try to get into this stock before then and hopefully anticipate that it shoots up because of earnings. And then my H2O Innovations position, I've been waiting for it to continue to drop. I plan to add to this one when it starts to recover and start to go in the upwards direction. I think this is going to be around the $2 or $1.85 range. That's where H2O Innovations has some really strong support levels. So I'm kind of waiting for it to dip down to that level. And then I think it will start to see the recovery really nicely. As for dividend stocks, I want to continue adding to my Fortis position that I just started, hopefully adding 2 more stocks to get it up to that 200 range where TELUS and Algonquin Power are at. If I can get 2 more shares around the $50 mark, I think this is a great price to get in at. I think that it will get to that $60 range over time, and we'll be getting that 4% dividend. So this is really one I'm targeting. I also want to keep adding to my Canadian high yield dividend ETF, VDY. I've been wanting to add 1 or 2 per week because this is one that is majority made up of the big banks in Canada, and they've all just had really good earnings report and coming out that they are doing extremely well. And I think they are going to be great stocks to continue into the future. So I really want to beef this up to get my exposure to the Canadian banks and other great dividend stocks overall. And the final dividend stock I have on my watch list is Smart Centers. It pays a really high dividend yield and pays a monthly dividend. So you're getting a little bit of that money monthly. So it pays over a 7% dividend yield. And remember, it pays out monthly. So just getting that monthly cash flow up will be really nice. So I want to add 1 more share over the next week to my Smart Centers position. So that's kind of it for my update video. And you guys now know what I'm going to be looking to add to my stock portfolio over the next week, what's on my watch list. And as always, it's never too late to start investing. You can start investing at any age. It's always a good idea, and you're going to thank yourself later down the line. And I'll put a link below to a WealthSimple link that will let you get 10 free dollars when you trade your first 100 using WealthSimple. WealthSimple is Canada's only $0 commission trading platform. It's the only one that lets you keep all your money in your stocks and not lose it towards commission. You can buy 1 stock and you won't be charged a single penny on commission fees, which I love. And again, I'm also going to have my Excel spreadsheet link down below. So test it out. Let me know how you think. If you like it, if you don't like it, give me some feedback. So I hope you guys enjoy this video, and I'll see you in the next one.